Silver just hit $68 per ounce. And if you're only looking at the price, you're missing the most important part of the story, because the price is not the event, the price is the reaction. The event happened years ago, quietly, while most investors were focused somewhere else. It happened when the world decided to electrify transportation. It happened when governments committed trillions of dollars to renewable energy. It happened when artificial intelligence started demanding massive amounts of computing power. And it happened when the global economy became more dependent on advanced technology than at any point in history. All of those trends were building beneath the surface long before silver reached $68. The market is only now beginning to recognize what they mean. For most of modern financial history, silver lived in gold's shadow. When people wanted safety, they bought gold. When they wanted growth, they bought stocks. Silver sat somewhere in between, important, but rarely the center of attention. Yet something changed over the last decade. Silver stopped being just a precious metal and started becoming a strategic, industrial metal. That's a very different story, because precious metals depend heavily on investor sentiment. Industrial metals depend on real-world demand, and the demand for silver today is tied directly to some of the biggest economic transformations happening on the planet. Think about solar energy. Every country wants more of it. Every government is investing in it. Every year more solar panels are installed than the year before. What many people don't realize is that silver plays a critical role inside those panels. The world talks about clean energy as if it's simply an idea. In reality, clean energy is built from physical materials. It requires metals, manufacturing, supply chains, and infrastructure. Silver sits right in the middle of that process. Every new solar project creates new demand. Every expansion creates more demand. And unlike consumer trends that come and go, these projects often operate on timelines measured in decades. Now add electric vehicles to the equation. The global automotive industry is going through one of the largest transitions in its history. Automakers are spending hundreds of billions of dollars transforming their production lines. Governments are offering incentives. Consumers are slowly changing habits. Whether someone likes electric vehicles or not is irrelevant. The investment is happening. The factories are being built. The vehicles are being produced. And silver is one of the materials helping make that transition possible. When you combine electric vehicles with renewable energy, demand starts looking very different from what it looked like 10 years ago. Then comes artificial intelligence. This is where the story becomes even bigger. Most people think of AI as software. They think about chatbots, algorithms, and digital tools. What they don't think about is the physical infrastructure required to support AI, massive data centers, advanced processors, semiconductor manufacturing facilities, electrical systems capable of handling enormous amounts of power. AI isn't floating in the cloud. It's running on physical hardware, and building that hardware requires resources. It requires materials. It requires silver. Every new data center, every new server farm, every new semiconductor facility contributes to a demand picture that continues getting stronger. Here's where things become uncomfortable for those assuming silver's move is already over. Demand is accelerating, but supply doesn't move nearly as fast. Mining is one of the slowest industries in the world when it comes to increasing production. New discoveries take years to develop. New projects require billions of dollars. Environmental reviews take years. Construction takes years. By the time a mine becomes operational, the market environment can look completely different from when the project started. This means supply often struggles to respond quickly when demand changes. And that's exactly the kind of imbalance commodity investors watch closely. Most people don't pay attention to inventories. They should. Inventories tell you whether a market is comfortable or stressed. They tell you whether supply is keeping pace with demand. When inventories are growing, the market usually feels safe. When inventories begin shrinking year after year, something important is happening. The cushion protecting the market gets thinner. The margin for error gets smaller. Buyers become more aggressive. Suppliers gain more pricing power. Eventually, prices begin reflecting the new reality. That's why serious investors spend so much time watching inventory trends. They know inventory changes often reveal problems before headlines do. And here's the thing that fascinates me most about silver right now. Despite reaching $68, most people still aren't talking about it. The average investor knows more about a trending stock than about one of the most strategically important metals in the modern economy. That tells me something. It tells me the broader public conversation hasn't fully caught up with what's happening. History shows that major trends often spend years developing before they attract widespread attention. The fundamentals change first. Institutional investors notice next. Mainstream awareness arrives last. The question isn't whether silver has already moved. The question is whether the forces driving silver have finished developing. When I look around the world, I don't see evidence that they have. Renewable energy continues expanding, and investment continues growing. Governments continue spending on infrastructure. Semiconductor manufacturing continues increasing. Electric vehicle production continues rising. These trends are still unfolding. They're still creating demand. And that means the silver story may be much larger than a simple move to $68. Now let's step back and look at the bigger picture. Because silver doesn't exist in isolation. It exists inside a global economy that is changing rapidly. Over the last several years, governments around the world have become increasingly focused on economic security. They want resilient supply chains. They want domestic manufacturing. They want reliable access to critical materials. Why? Because they understand that future economic strength will depend on controlling the resources needed to build advanced technologies. Silver is quietly becoming one of those resources. Imagine you're the CEO of a major technology company. Your biggest concern isn't whether silver rises 5% next month. Your concern is whether you'll have enough supply 5 years from now. Can your suppliers meet future demand? Can your expansion plans stay on schedule? Can you continue building products without interruptions? Those are the questions being asked in boardrooms across the world. And when enough companies start asking the same question, markets change. One of the most common mistakes investors make is assuming that a rising price means an opportunity has already passed. History suggests the opposite is often true. The early stages of major trends usually feel uncomfortable. They feel expensive. They feel risky. Then, years later, people look back and realize they were witnessing the beginning rather than the end. I'm not saying silver must continue rising. Nobody knows exactly what markets will do, but I am saying that the forces supporting silver today appear far stronger than many people realize. Another factor worth considering is human psychology. People tend to pay attention after a trend becomes obvious. That's natural. It's how we're wired. We feel safer moving with the crowd. The problem is that by the time everyone agrees something is important, much of the opportunity may already be behind them. The biggest winners in financial history often recognized changes before they became popular. They noticed shifting fundamentals while everyone else was focused on short-term noise. Right now, the conversation around silver still feels surprisingly quiet. Yes, investors are talking about the price. Yes, analysts are discussing the rally. But very few people are discussing the deeper structural story. Very few people are discussing what happens if industrial demand continues climbing for years, while supply struggles to keep pace. Very few people are discussing what happens when multiple global megatrends begin pulling on the same resource at the same time. This is why silver is so fascinating. It sits at the intersection of technology, energy, manufacturing, and monetary history. Very few assets occupy that position. If economic uncertainty rises, silver can attract investment demand. If industrial activity expands, silver benefits from manufacturing demand. If governments continue investing in infrastructure, silver benefits again. It has multiple engines driving its story simultaneously. None of this means the road ahead will be smooth. Markets never move in straight lines. There will be corrections. There will be pullbacks. There will be periods where sentiment turns negative. That's normal. But volatility is not the same thing as fundamentals. And right now, the fundamentals remain difficult to ignore. The world wants more energy infrastructure. The world wants more artificial intelligence. The world wants more advanced manufacturing. The world wants more technology. And all of those ambitions require resources that cannot be created overnight. So, when people ask whether silver hitting $68 matters, I think they're asking the wrong question. The better question is what pushed silver to $68 in the first place. Because when you follow that trail, you find yourself looking at some of the most powerful economic forces shaping the next decade. You find yourself looking at supply chains, industrial demand, technological transformation, and global competition for critical resources. In other words, you find yourself looking at a story that is far bigger than silver alone. The biggest shifts in markets rarely arrive with a warning sign. They begin quietly. They develop gradually. Most people ignore them. Then one day everyone is talking about them. The silver market may be approaching one of those moments right now. The signs are there. The demand is there. The strategic importance is there. And if those trends continue unfolding the way they have been, then years from now investors may look back at silver crossing $68 and realize it wasn't the end of a story. It was the beginning of one.